Broadcast. Welcome to the Friday, June 21st episode of the Zaner MarketCast, your one and only spot to keep up with all the agricultural market news. I am Joe Nikruto, and I'm here with
Dan Hussey.
Dan Hussey, man of the week. So today we've got some great stuff to cover. We're going to talk about negative fundamentals, or we're going to talk about negative price action. I can't wait. Yeah. I thought maybe I had to run to the dry cleaners, but all my blue and black polos were clean. No doctor's appointments, nothing to get me out of visiting with you here today. But one bright spot so far this week, I think, is that you were on, or you are going to be on television. That is pretty exciting.
Yeah, my first TV spot here with This Week in AgriBusiness on RFD-TV, hosted by Mike Pearson, an old friend of ours.
Mike Pearson.
A little throwback to a yesteryear. But yeah, I'll be that'll be airing tomorrow at 7 a.m. Central. So, or anyone that wants to check it out, and you got RFD-TV, you can always stream it online as well. But sure, check it out. We do a quick little 10-minute segment, rocking through some of the markets, talking honestly about some of the things here we're going to cover today. But generally speaking, that won't be my last time, I hope, on that show or others. So we'll see.
So how does it even work? Like, how do you get on television?
Yeah. So much like in Willy Wonka and the Chocolate Factory, when you see the TV mic, no kidding. I believe it or not, the studio is actually not very far from where I am in Wheaton. They shoot over in Batavia. So about a 15-minute drive door to door. I showed up at about 10 minutes before Mike and I sat down to shoot. We shot our bit, and he would have been busy the rest of the day filming other segments and sessions, but I was out the door within probably 20-25 minutes. It was wild. So under 45 minutes from my house back to my house to get this recorded. Kind of a cool experience.
Incredible. Yeah. And so that's not much time from start to finish. You went from your house, you went to the studio, and then you went back to the house all in under an hour. That's incredible.
I think we were filming probably at about 8:10, 8:15. I was back walking in my door at home by the market open that morning.
Wow. Shout out to Mike Pearson. I vaguely remember him, but I bet it was nice to see him after all that time.
It was.
We see him at Commodity Classic every year, don't we?
And ironically, that was one of the discussions we kind of had, and it will be a good segue into some of our stuff in our market recap today. We were sitting there at Commodity Classic. Joe was there. We were all having discussions about those lows in February, if that was going to be the low in the market, proverbially contract lows for, December corn and November beans. Yeah, they traded lower, but in a liquid times, in a year prior when we're not paying attention to those contracts. But generally speaking, that low had set in, and we got a decent springtime rally into that late plant. But it seems like the charts here today, when you go over where we closed for the week, it kind of seems like we're hunting out those levels. We'll take a look at head and shoulders pattern in the market recap, and you'll see it on your screen eventually here when those are shown a bit later, how that targets that area. And then in corn, and then in November beans, we've already, I believe, taken out that low. We did here this week, and we actually settled below it. So
let's do them one at a time. We'll start out with this week's numbers with our week in review. For corn, we opened at 448. The high there this week was 452. This is July corn still. Though I believe we'll be moving over rather quickly this week, actually. Yeah. First notice day on Friday. So we're going to roll all of our positions well in advance of that, but no later than Thursday's close, I believe. And everybody wants to double check me on that. I'm the last guy, always at the last minute. Low in July corn this week, 434 and a quarter. Last trade I saw was 435. I believe that was down 15 on the week, and the funds, of course, coming into the day, estimated to be short over almost 220,000 contracts for the week in May corn. Head and shoulders, we mentioned that's been on the chart, getting a lot of traction out on in the Facebook groups. Export sales this morning, rather weak. Weather model disagreement. Is it going to rain? Is it not going to rain? GFS, right, says, yes, it's going to rain. Euro model says, no, It's not going to rain. Market did not seem to want to pay too much attention to that today as we closed. Rather, those export sales were not great. Not great.
No.
Argentinian yield, a little lower than they thought. Maybe loan price action bright spot, but no traction for corn there. Head and shoulders still in effect, yes?
Yeah, we've got it coming in, that neckline around 440 here, broke today for that July contract. You'll see it on the screen there. We're below all our major moving averages. We were rejected at a test of that 100-day and 55-day and even 18-day there earlier this week. I mean, this is the proverbial, technical, I think, move lower now, right? Getting below those levels. They peaked their head above there. And Joe, you and I were talking candidly, right? About the move up there. And hey, it looked like it was one of those types of situations that they could have established themselves above. It would have run this right shoulder of that head and shoulders pattern, which would have negated this entire chart pattern, but it didn't. We sold off, fell back below those levels, and have now had 4 days of price action below and taking out, the lows from April and June, which effectively created that neckline around 440. December corn, a very similar look to the chart. The only difference here is they only briefly spent some intraday time above those levels too. That 55-day, 100-day, and 18-day moving average. December corn was obviously rejected at its 200-day earlier this year at the highs of May. That's formed the head of the head and shoulders pattern. And now the right shoulder here, having failed there or set itself on the 14th, now we've broken below that 460 neckline. It seems like we might be targeting, let me get the right low, 446 low here. That was the February 26th low at 446. That seems like the next area of interest on the chart. And that similar level there was the low of 422 quarter on July corn. Not saying July can't get there by next Thursday in the contract roll, but we'll be, talking more, I think, about that September low, which is at 432, to give people a little bit of an update there.
Technically speaking, there is nothing on this chart to hang your hat on if you're bullish. Nothing.
Correct. I don't see any reason other than thinking we're oversold for a couple of days, but markets can stay oversold. Those RSI indicators getting down into that oversold territory. Markets can stay irrational, oversold, overbought longer than you can stay liquid. And that's the moral of the story. You might want to a lot of people may want to talk about fading the fund position here, but they're just going to get bigger. And as long as they're today. Correct, which sent a lot of puts into the money, and now those will be new futures positions. Next week's commitment to traders will be really interesting. That'll be a reading next Tuesday and next Friday. If we're pushing into those lows of February, I wonder if we're not going to have another record short here from that fund position.
So my grasp of history is nebulous at best, right? But I can picture times in my mind where you come out of option expiration, and then all of a sudden we're going to start paying attention to weather, or all of a sudden we're going to add risk premium back, or
Absolutely.
Your South American situation comes into focus a bit more, and it's not as bearish. So fundamentally, maybe there can be some, or you can talk about the extent of difficulty in the Corn Belt, too wet on the western side, shaping up to be a little dry on the eastern side. And who knows what July brings, of course. But fundamentally, these are all things that can be debated, but technically not much debate to be had there.
Yeah, if you're looking at that chart of corn, technically, today was the day, if you're not short, to maybe think about getting short, and we'll see how that price action develops.
How about wheat? This week, wheat opened at 607 3/4. The high was 610, and I think that was a gap lower. July wheat high was 610 1/4.
Yes.
Low 557 3/4. I write like a doctor. Close of the week.
We gapped from about a 612. I don't mean to cut you off, but we closed last week at around 612 quarter. So that was a gap on the open.
Close today. Last trade I saw was 561.5. That was down a whopping 51 1/4 for the week. That is the fifth week in a row. I think just
so.
like it went up,
I'm losing
came
count,
right down.
right?
Yeah, right. 17 of 18 days down.
Right. And that's the crazy thing about this sell-off is that you could have blindly sold wheat anytime since $7 and only had one day where it really went against you at all, like last week there on the 11th. That's crazy. I mean, lower lows, lower highs every day, red candles straight down faster, in my opinion, than it even rallied.
There again, I don't have much historical reference or much historical experience with a market move of that nature. That's pretty brutal.
Agreed.
Even for the
I mean,
ags.
you see this, right? You see this in maybe the softs are a little less liquid. Like this looks like an inverted chart of, orange juice or cocoa recently,
Lumber
right?
back in the 90s, right? Yeah.
Sure. And,
All we're missing is the lock limit down.
Which is kind of amazing in this sell-off that we haven't had a limit move. It has been this just, I don't even want to call it technical because I don't think there's technicals here. It's systematic selling. Every little price, uptick gets sold into. Somebody big somewhere is leaning into this, and that's all. It feels very, very rhythmic in its selling.
Speaking of which, funds coming into the day estimated to be short 63, and I would almost say only 63,000
right?
Contracts.
Yeah.
You know what I mean? Seems to me that with that price action, it should be more. But only 63,000 contracts short. And so what are we equating this to? Harvest pressure here in the U.S. where folks are bringing in wheat a couple weeks early. Farmers are bringing in wheat a couple weeks early. They're putting it on top of wheat that has not sold at the co-op or the elevator from last year.
I think there was a run up, with concerns of Russian wheat. I think quality is maybe, here in the U.S. that, we rallied on international news about wheat and then got sober by the conditions and the quality of the wheat in the U.S. that's being produced. I mean, you look at spring wheat, we've already taken out those March lows. Something is, there's a reason wheat is heading lower, and production, numbers must just be coming in bigger than expected. It's the only thing you can really, attest this to.
I saw a tweet this morning. I saw a tweet this morning. I can't remember. I want to make sure that we attribute it to the right person, but I can't remember the name, talking about harvest in Russia coming in lower than they had anticipated. And I thought the number was 40%. And I hate to traffic in, I can't remember what it was, but I think the number was 40%. And so there may be some reckoning here where you have discussion about what's happening with U.S. and not just U.S. but global harvest pressure, right? Versus the kind of numbers that you're going to end up seeing out of Russia, which could potentially be much lower than folks had anticipated. Still a big debate, but there's no debating what's happening on that chart. Am I right?
Right. And when you step out to the monthly or weekly, the really big time frame charts, you had a massive run up in January 2022. 2023 is sold off in kind of a channel lower. We're just holding that channel here into 2024. The highs of $7 you can see on the chart there, holding a major channel resistance for Chicago wheat. I mean, it's crazy to think, but it's almost just like weekly or monthly technicals are what are at play here, and
how
ignore
far back
anything
does that
below
go?
that.
That channel that we're looking at.
That channel goes all the way back through August of 2022. So we're
coming
talking
off
2
the rally.
years.
Okay,
Yep.
yeah.
2 years of this channel lower for wheat. And I hate to be the bearer of bad news, but the downside of that channel now could target $5 is where that channel support is. But,
and it isn't the most perfect channel we've ever seen, but boy, that's a lot of symmetry, isn't it, Dan? I mean, that really looks
absolutely.
Like there's no question. That's very, very interesting.
Somebody somewhere cared about that on the big time frame.
I guess so, man.
I don't know how you trade that, but okay.
How about beans? Opened the week at 11.79 in July beans. The high was 11.79. Low was 11.55. Close or last trade I saw rather 11.60 and a half, down 19 and a quarter in beans on the week, with the funds estimated to be short 82,000 contracts as we came into the day. Old crop exports above expectations. New crop exports suck still.
Yeah.
And so not much. I was a little surprised that old crop exports came in above, but I'm not surprised that these new crop exports. I just, can you add any color to that? I mean, people are staying away in droves, aren't they?
Yeah, particularly China is staying away, right? We have nothing sold almost here for for new crop. And it really begs the question, where are they? What are they doing? You have to assume they're going to South America. I think you can watch some of the exports there, but even I think there's been a lot of color shed from other folks that are more knowledgeable on this subject than we are, that China's imports of beans are just down, period. And that, you wonder if they have stockpiled or overbought for the last few years because of different trade policies. I kind of have this theory I've been thinking through that maybe some of the policies that they were kind of forced into buying beans, as part of trade deals, maybe they overate and now they're stuffed and they're waiting for that to clear out through their system before they start the purchasing, because they are hand to mouth with their crush. And we saw them sell meal on the open market. So it's kind of, I think, what they're trying to tell the world. And it certainly would placate into China's own, their own to their benefit, right? Because they want
other
beans
side
as
of
cheap
that
as they
coin.
can get them.
Other side of that coin, I saw, I think it was ADM say that if they're stockpiling beans, there are no better beans than U.S. beans because the quality's higher, right?
Yeah,
so you
absolutely.
got better quality. And if you're going to continue to stockpile, which they assume they're doing, they are likely, or it would make more sense for them to get them from the U.S. Bean meal.
And on the China note, real quick.
Yep.
Watching the weather market there really has me confused as to why they feel so comfortable being so behind on certain imports. They don't look like they're going to have the domestic production this year that justifies the way they're acting on the international scene. So I don't know, maybe it's a year we'll see some really late marketing year purchases or something to catch them up, and that they're trying to play that game of keeping prices down for the meantime. But nevertheless,
and it's great that you
unanswered questions there.
Great
right?
that you mentioned that, because if you look at this chart, and so I suspect that we need to pay very careful attention to the weather in China, right? And so they came out the other day and said, oh, we're going to have a bumper crop, but it's 108 degrees and it's not getting, maybe they're going to get some relief, maybe they're not. So we really got to watch that. But interestingly, when you look at this bean chart, and see where we are today, certainly great. I think South America is slightly less expensive than the U.S., right?
You've got to imagine that, right? With how much we've fallen. That maybe wasn't true, and we may have talked about this a week ago. That wasn't true a month ago, but now we've shaved off $1 off of the November beans. July beans themselves here near crop is also $1 off their highs. You got to imagine we're getting price competitive if we weren't before.
Absolutely. Just looking at that chart, that's the one bright spot in this bean chart, is that we got to be pretty close to being price competitive, right? How about meal? Go ahead.
And having closed green on the day, kind of I think a little misleading there on the beans. It was an inside day worth of price action, down on the week after yesterday's heavier selling. We're below.
What did we close up on the day?
Closed up 5 1/4 on the day for July beans. Up 3 1/4 for Novi beans. That's impressive, but we also closed at lows yesterday, right?
Sure.
So
victory.
From where you came. Wanted to point out on the bean charts here before we go off, we're holding downward sloping trend lines, a very aggressive channel lower, but also we've broken below those channel supports and that channel higher that we were holding since March. So for all intents and purposes, right, any form of the uptrend is probably now out of the minds of technical traders. And you're now considering, right, breaking those January or those February lows and even the June of 2023 lows for Novi beans. And you're into kind of uncharted territories, if you will. We haven't been this low and this liquid of a market. So for all intents and purposes, we're already making new contract lows for the November bean.
Yeah. Now, meal and oil, on the other hand, kind of muted trading week, right? Meal opened at 367.40. High was 367.40. Low 357.20. Last trade I saw was 361.80, down 660. Go ahead.
No, that's correct.
Puts them up. Funds estimated still long 90,000 contracts, which I find very interesting.
Which is the weirdest thing, right?
A muted trading week in meal, and same thing with oil, right? So opened on the week 43.63 July bean oil. High was 44.91. Low 43.13. Last trade I saw 43.94, up just 26.26. They're short about 69,000, 70,000 contracts there coming into today. Again, muted price action for the week in the products, while the beans themselves a little bit weaker. I find that to be interesting.
Which I think after a fairly stronger than anticipated crush last week, we'll see what the number comes out this week. It's interesting that crush is going up here alongside crush margins getting better, right? If the price of input beans is going down and oil and meal have stayed completely stagnant for the week over week here, and yet we're down $1 in the soybeans, crushers are all of a sudden becoming more profitable. So there must have been, and I haven't looked at it, but without even looking at it, I can almost assure you there has been some major spreading involved in the crush spread and some major trading going on there, which is probably why we're not seeing the meal and the oil move around all too much and really, knocking down the price of beans.
Or fall apart, the meal and oil. You would almost expect.
You would expect it, right? But they haven't, right? Those are holding on to really for the whole month of June right now. We're pretty much sideways in those markets, right? Whereas, as we talked about there for the month of June already, July beans are down about 40 cents and Novi beans are down, about 40 cents as well, right? So crushers are getting cheaper beans to input to be able to sell for better prices or relatively better prices for meal and oil.
Dan, is there anything in the ag complex technically that catches your eye? Is there anything that we missed?
We don't often talk about it, but I do think the development on lean hogs here, we had a contract low in the August hog at 86.68. We actually then put in a key reversal. So hogs have been just in a very big downtrend, and I'm not so certain that we aren't seeing maybe a little bit of capitulation and technical reversal there. So I'm interested to see if the hogs can start picking themselves up and maybe start an uptrend here after that key reversal. We don't have many key reversals to talk about in the commodity world. So when they do, I like to mention them because it's kind of a once a year type, idea or trade to watch and look at. So watch that hog chart to see if they form a bottom there. On the other side for cattle, it seems like we're up and away. Both August hogs or August cattle and I guess August feeders haven't really done it yet, but August live cattle have broken above that trend line, and they're, the trend line off their contract highs through the highs of March and through the highs of May there. So, will we see a two handle in front of that market, and maybe even a three handle in front of the feeder complex if they can keep this rally going is kind of the idea. But those are big sideways consolidation structures that are maybe, trying to form a breakout to the upside for live cattle. I'd prefer to see feeders lead there, but it is
feeders should be the leaders, we always say, right? But,
right.
So the story with the fats is that there were big questions here. They tried, let me rephrase that. We saw some challenge with bird flu, right? Is it going to be a problem? Maybe cattle are going to fall apart. Packer margins, a couple different reasons why maybe bringing, some folks trying to advance the idea that path of least resistance for cattle or the path of more rapid expansion of the herd would come through lower prices, but we're not. Right. We're still in a place where whatever you got, bring it. They're going to give you top dollar. That does not necessarily speak to herd expansion. And this stuff is moving through the system. You can see it in the weekly prices that we're paying. A cattle on feed today, so we'll have to go back and double check and see what. I was
just going to say, don't quote us on this because obviously we just had a release of a news event and we don't have that data point in front of us to talk about now. In fact, I think it's out in still a half hour.
This chart is what's happening on the chart, especially for the fats, is rather clear. Is that you are moving to the top end of the range, and we're getting back to, if we haven't gotten over previous highs, we're right there.
Right. You're right there. It's ready, primed. If it wants to take off, it's something to watch because above these levels, the next major level is contract highs. And that's a significant level after a very long term, 6 months since October of last year, right? August. I mean, now going on over, I guess, 8 to 10 months of big consolidation in a massive, massive chart pattern.
And here we are back up at the top.
Yep.
Absolutely. Dan, how about we jump into the news? I'll kick it off. U.S. farmers shun buyers, cling to unsold corn as prices slump. I think this was our man, Carl Plume. I saw this Reuters story the other day, and another writer as well. After stockpiling crops for much of this season due to low prices, many farmers in the United States continue to shun buyers despite few signs that prices will improve. Grain supplies are ample and early ratings of summer crops are the best in years. A larger than normal volume of grain remains unsold, according to Reuters interviews with 15 whole grain farmers across the U.S. Midwest. By September 2025, U.S. corn inventories are expected to reach a 6-year high, according to the USDA. Farmers risk waiting too long to sell as a flood of newly harvested grain is likely to drag down prices this October and November. Buyers aware the harvest is coming still need enough supplies to keep processing plants running and exports flowing this summer. An economic stare down between growers and grain buyers is taking shape, says an analyst. Many growers sold just enough this spring to cover short-term cash flow needs. She said some are counting on adverse weather this summer to trigger price rallies, though nothing is guaranteed. Meanwhile, commercial buyers are banking on lower prices this summer due to the grain glut, analysts say. On-farm stocks represented 60.85% of the entire U.S. corn supply, the largest share since 2005. That's on-farm stocks, I think they're talking about, Dan. And I'm curious to know, we got to talk about this in a minute, how they know that. Some buyers are
that was the first thing that came to mind was like, that could be a very, very fluffy number.
They interviewed 15 people and came up with that number. So I'm a little curious about that. And as you can see the talk on Facebook, a lot of people curious about that. But then again, we also talk to people who have a lot of corn in bins. And so it's interesting to see. If we weren't smack dab in the middle of it, it would be a lot more interesting. But it truly is a stare down, a standoff here. Some buyers are trying to pry grain away from farmers by offering premiums for immediate supplies to fill near-term needs, but are lowering prices once those orders are filled. Farmers are still holding a larger than normal amount of their last harvest, while demand for corn has been fairly solid, analysts say. How they fill that demand this summer is unclear, said Dan Bassey, president of Chicago-based consultancy AgResource. They are short bought and the farmer is still long. Who is going to blink first? Now, Dan, indeed, who's going to blink first? So if the farmer is not sold, that means that your end user is not bought. Am I right?
Right. And we're coming out from a year where cash flows were very, very ripe for the taking, right? A lot of farms have, as long as you're not not completely hanging on to the last 2 years worth of crop, you're selling and putting money away in the bank. For those that didn't expand, take on more acres, bought the new equipment, whatever. Thought being is that we're coming out of a cash glut and going into, unfortunately, higher interest rates and inflation kind of ideology where people want to, and this is kind of the same thing that you see in South America, people want to hang on to those real assets because the value of their dollar might be diminishing too. So that does come with a warning from marketing analysts like ourselves that, hey, don't find yourselves in a place where you get behind on the cash flows because you want to hang on to a real asset. You got to make sure that, your finances are in order here. But generally speaking, right, those bases that we're seeing, those strong bases across the country, particularly in Iowa and parts of the Midwest, they want to get that grain out of your hands. So that's where the showdown's happening, right? You can see it in the cash market right now that elevators and producers, and buyers that need it are willing to pay up for that grain and try to get it from you. So take advantage of that, because I do fear that if prices continue lower, you're going to see this panic selling start to set in, and those bases will collapse because they'll have no reason to. People will be rushing with their trucks to try to sell to them and fill that capacity. The question is, how far down the rabbit hole does price need to go now before that panic selling, unfortunately, I think sets in?
So I would take the other side of that myself, and I would say if you haven't sold by now, you're likely a strong hand, and maybe you don't need to sell it. And so,
agreed.
The other thing is that
you've cash flow needs. Don't rest on your laurels. Is all I'm warning. Right?
And me, that's not. I'm not. This is not marketing advice. What I'm saying is that I think that those who hold it may have stronger hands than they have had historically. And
absolutely,
certainly there are folks that have had cash flow needs and they've made sales, and frankly, it's worked out great for them. The fact that they've had to make those sales, some of them made them at much higher prices than we see today. But the thing that I wonder is, okay, the farmer has got some road here because he's done planting. They're getting stuff put up. They're getting it wiped down. The next time he's really got to worry is when they're going to harvest, and they're going to need the room. And so there's some time here where maybe the end user is on their heels and the farmer has kind of got the upper hand. I think some of the basis in some spots is telling you that already, but it's not like that all over the country, I don't think.
No, I agreed. It's not like that everywhere, but where they need it, they're certainly willing to pay a little bit of a premium for it via the basis. And again, like, while we were a little bit pessimistic on those technical charts earlier, this could also be the reset in price, and we get that big C word, capitulation here, that could form, finding new lows right along the time of getting some stress to the crop during summertime heat. Keep in mind, this year we're probably going to have a slightly later pollination season, so maybe not even starting until the second week of July. So we've got room, in my opinion, to head down, find a little bit of a midsummer low, get the heat and weather markets cooking again, and then if there's that significant rally after that, that's the opportunity. If you've been, I think, really strong-handed and willing to wait that out, it will hopefully be coming sometime, a little bit later this summer. And then, after that, who knows? We don't want to get ahead of ourselves.
We can't wait forever, right? I mean, bottom
exactly.
line, you're running into some drop dead dates, and sooner or later, we just hit the summer solstice today or yesterday, was it?
Yep.
Yep.
So it's all downhill from here.
All shorter days from here on out. All right.
So oil and corn groups here are teaming up against the Biden tailpipe emission rules. A story from Reuters. The Environmental Protection Agency this spring finalized new rules for models of semi-trucks, buses, and other heavy vehicles released from 2027 to 2023 in a bid to cut 1 billion tons of greenhouse gas emissions through 2055. It's also announced regulations to reduce emissions from cars and other light and medium duty vehicles, and a separate set of standards. The administration projects will require that up to 50% of cars sales will have to be electric between 2030 and 2032. Now, I don't know how they're going to mandate sales, but hey, the American Petroleum Institute, API, which is the top U.S. oil and gas lobby group that includes ExxonMobil as well as other majors, has, as a member, said on Tuesday that it is going to be suing the EPA over its truck regulations just days after having filed a separate federal lawsuit over the agency's light and medium duty vehicle rules. Now, I would love to see, and this is a call out to any aviation, anyone in the aviation world, I want to see the aviation groups get behind these lawsuits as well, because there is, I think, any type of consumer here of petroleum products needs to force the EPA here to EPA's hand for clearer guidance on some of these sustainable practices that allow producers to tap into this demand. Anyway, that aside, the National Corn Growers Association and the American Farm Bureau Federation have also, and the Owner-Operated Independent Drivers Association have also joined the suit as of today. So again, we're seeing now like minds here that are trying to keep the economy of not only agriculture and biofuels alive, coming together with big oil to try to get the government to change some of their mandates and give clarity here where there hasn't been any, right? The EPA has tried to impose a one-size-fits-all approach to addressing climate change by prioritizing electric vehicles over climate remedies like corn ethanol, said the National Corn Growers Association President Harold Wool. Transportation is responsible for more than a quarter of the national greenhouse gas emissions, and regulations from a major part of Biden's broader plan to decarbonize the United States by mid-century. The oil and ethanol industries have often clashed over U.S. biofuel mandates, but tend to join forces against electric vehicles to preserve the continued use of internal combustion engines. So, I love to see it. I love to see, these two groups not fighting each other right now and coming together and seeing that, hey, I think we can all agree that any way you slice it, in my humble opinion, going completely EV doesn't make sense, from battery production to the power grid. So keeping the economies alive for these, and this lawsuit seems to be a good way of maybe getting some more clarity down the road for our biofuel mandates that we've otherwise been pretty well left in the dark on, unfortunately.
And that brings us to the next story. Lawsuits mount over emissions rule. National Farmers Union, the NFU, and Renewable Fuels Association, RFA, filed a lawsuit Monday against EPA in the Court of Appeals for the District of Columbia over the emissions rule. Leaders from the two organizations said the EPA rule would effectively mandate the production of electric vehicles while ignoring low carbon liquid fuels. NFU and RFA follow a similar lawsuit filed last week by the American Farm Bureau Federation, National Corn Growers Association, the American Petroleum Institute, and others over the light and medium duty rules. The light and medium duty vehicle rule was finalized in mid-April and would go into effect in 2027. The rule is meant to reduce greenhouse gas emissions from light duty vehicles, which amount to about 16.5% of the country's greenhouse gases, allegedly. The rule, if fully implemented...
Don't forget about the cow farts.
Yeah, right. The rule, if fully implemented, would reduce emissions by 7.2 billion tons by the end of 2055. EPA officials maintain the rule did not favor one technology, but the rule focuses heavily on electric capabilities while only barely mentioning other options for reducing emissions, such as increased use of biofuels. If only we could grow corn really well here in the United States. If only we had a ready supply. We're just missing
that one major thing.
Yeah.
Oh, God.
I'm still salty about these guys at Commodity Classic kicking the can down the curb while we're standing there. RFA and NFU stated,
live streaming it, right, for the big announcement. And it's not coming. Okay.
Yep. Hung over to beat the band. RFA and NFU stated the two groups filed the lawsuit because EPA clearly lacked the authority to adopt the regulation, which essentially mandates the production of battery electric vehicles while at the same time ignoring other technologies. Growing number of lawsuits could spark Congress to take further action using Congressional Review Act, CRA. Resolutions of disapproval over the rule have been introduced in both the House and the Senate, but neither has come to a vote. So that would be, in my opinion, that would be rather productive and could be something, we have not seen very many effective
bipartisan resolutions,
exactly,
right? Both sides of the aisle can see eye to eye here. Biofuel mandates are
and they absolutely
the most beautiful. Right. It's a great thing. It hits all the green marks for the left. It gets the right, excited about continued expansion of the economy and their voter base too. I don't understand why this is such a hard thing to come together on, but
and just
maybe
the way,
we have a biased opinion.
And we do, certainly we do. We get paid when people trade. There should be a disclaimer, right? And so if they're going to trade corn or we're going to hedge corn, of course we're biased. But by the same token, right? This, like you said, this checks all the boxes, and the best they could do was come out with what was the mandate where you have to have
cover cropping, efficient
fertilizing,
and no-till.
What was the other one?
Right?
No-till.
Which again, we're seeing these one-size-fits-all catch-all solutions that, when you break down across the country, those three things don't work everywhere, or are very different depending on where you are, whether it's
or the
Feds, cover crop.
Or the Feds picking winners and losers, right? And there's
Absolutely.
no reason for this, is that they can come at this in a very different way and make it work for the entire Corn Belt instead of just folks in certain locations or folks with certain practices. It just doesn't make any sense. Hopefully,
doesn't make sense.
Hopefully we can use Congress, or hopefully Congress can get involved, or rather it would be very nice to see Congress get involved and find some sort of resolution to that. Dan, what else we got to talk about? Tell me again, you're going to be your television episode is going to air when?
7 a.m. tomorrow, and then throughout the day here, 7 a.m. Central, 8 a.m. Eastern there. But and then again throughout the day for This Week in AgriBusiness. Catch me on there with Mike Pearson.
In AgriBusiness.
Yeah, and hopefully won't
Dan
be the
Hussey.
Last time you see my smiling face on your television set either.
That is incredible. TV star. I knew him when. All right, so that brings us to our favorite Carter, the producer portion of this week's podcast. What is your favorite childhood movie? So it was a movie. Ooh. Carter will need some clarification. This was a movie from my childhood or a movie that came out 2 days ago that kids watch. Which is it? Oh, from back in the day.
Good catch, because I've got both.
When I was a kid, there were no movies. It was all black. It was, there were silent movies. And so I don't even know if they had titles. I think it was, black and white. You guys
were still using chisel and stone, right?
They would carve out, and then
tablets,
they would
right?
flip the stones really fast, and it looked like a movie. I think that's how old I am. Favorite? Go ahead, Dan.
Favorite movie then? If
favorite
it's not
movie,
from your childhood.
Well, when I was a kid, truly, one of the movies that would blow your mind would be Willy Wonka, right? That was a pretty cool movie.
I assume,
the original,
Wilder.
the only Willy Wonka. right? The original
Agreed.
Gene Wilder movie, you would come on and you could not stop no matter what. But, and not sure that I'm a huge Star Wars fan, but in 19 whatever year that was when Star Wars came out, I don't remember there being anything like that was a blow. That was a blow your mind, at the movie theater sort of thing. To where I think we saw, I'm sure we saw that movie in the theater at least 3 or 4 times. And being a kid back then, it was not what it is today. I mean, it was a big deal to get to the movie theater because, of course, you had to fire up the wagon train and get 3 or 4 counties over. But if I had to answer, I would probably say Star Wars.
Ford the river and hope you don't die of dysentery. Right?
Me chased all the way to the theater by indigenous people.
I loved Star Wars growing up, but I was going to not bring it up because I hate what Disney's done with it. But that's another discussion for another day. My favorite movie,
and somebody who's a bit more of a nerd than me, I think. I don't know if there's.
Oh, absolutely.
Maybe, if you're buying beer, I'll listen. Yeah,
complete nerd. But Back to the Future was probably my favorite movie growing up. That was just the coolest. I thought it was wild. All 3 of them, for that matter, I'll throw them in. But certainly the first and the second, I just couldn't get enough of them. Outside of Star Wars and other things, but that was my favorite movie growing up.
Battlestar Galactica.
I will say.
Was not a movie. That was a television show, right?
TV show.
Galactica. Yeah.
Yeah, and actually the original and the remake of it's great too. But my favorite movie, I think maybe of all time, is actually my favorite book, which is A Hitchhiker's Guide to the Galaxy.
They have a movie of that
book. They do. It's okay. The movie's not terrible. It does a good job of summing up a wacky, crazy book, but the book itself is phenomenal.
Just okay in the movie part, though.
Yeah,
well, there you go.
Watchable. Good and entertaining. Well, thanks for listening to the Zaner MarketCast today. If you need more, just because you can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. And if you've not already, do check out our daily Ag Hedge hotline where you can call in every day and get the agricultural updates from our one and only Ted Seifried, who you may have seen on RFD-TV and Market to Market, and hopefully Dan Hussey too. The best part is that it's completely free. You can find the sign up for this. Yeah, don't have to pay a dime for it. You can find the sign up for this and the links provided. Thank you again. And be sure to like, comment, and drop us a follow for the podcast to not miss a beat. And we will be back with you as price action develops.
Have a great weekend.
Have a great weekend, everybody.